am going to tell you all about the global financial crisis, when it happened, what happened during the crisis, when and where. So, that is all about the global financial crisis today in the course on global trade and commerce. So, what is a financial crisis? You often hear of financial crisis, you hear of terms such as economic recession, the economy is in a depression, you know, it is plagued by contagion. So, what are all these concepts here? What is a financial crisis? Basically, it is a situation in which the supply of money is outpaced by the demand for money. This means that liquidity is quickly evaporated in the system because a lot of money is withdrawn from the bank by the investors and also the normal depositors due to some kind of a fear that the banks might collapse, and therefore, it leads to what is called as a financial crisis. Now, the financial crisis is deep rooted in an economic crisis, a situation in which an economy of a country experiences sudden downturn brought about by a financial crisis. An economy facing an economic crisis is most likely to experience falling GDP, drying up of liquidity, there is no cash in the economy, rising and falling prices due to inflation and deflation. An economic crisis can further deteriorate and become recessionary in nature, or also could lead to a depression, also called as the real economic crisis. Now, generally all over the globe, financial crises are associated with banking panics. You know, you lose your faith in the banking system, it leads to recession, it leads to stock market crashes, just as it has happened now during the pandemic. The moment the global economy collapsed, the stock markets all over the world collapsed. Bursting of other financial bubbles, currency crisis is also a very important part of the financial crisis, and of course, the sovereign defaults that occur due to the crisis. Now, let me tell you a little bit about the global financial crisis and its origin. Now, since it happened at a global level and all the countries in the world were affected by this crisis, it is called as a global financial crisis, and it happened in the year 2007-8 and is considered by many economists as one of the worst financial crises after the Great Depression of 1929 or in the 1930s. It began in 2007 with the crisis of the subprime mortgage market in the United States and developed into a full-blown international banking crisis with the collapse of the investment bank called Lehman Brothers on the 15th of September 2008. So, please remember this. Once again, I am repeating, the global financial crisis took place in the year 2007-8. It was a subprime mortgage market in the US and developed into a full-blown financial crisis or an international banking crisis with the collapse of the investment bank Lehman Brothers on the 15th of September 2008. Now, it was because of the excessive risk that the Lehman Brothers took that helped to magnify the financial impact globally. Massive bailouts of financial institutions and other palliative measures and fiscal policies were employed to prevent a possible collapse of the world financial system. The crisis nonetheless was followed by the Great Recession. The European debt crisis is also an important example of a financial crisis. A crisis in the banking system of the European countries using the euro followed later. Commercial banks across the globe suffered from a sudden rush of dry vaults by depositors, causing a bank run. So, why the financial crisis of 2008 happened? Basically, it is the housing bubble burst in the United States. It is called the United States subprime mortgage crisis, as I already mentioned in my previous slide. Now, what is this subprime lending? Does it happen in India? Yes, it happens in India and it happens everywhere in the world. Subprime lending means giving loans to people who do not have the capacity to repay, or they may be suspects in repaying back the amount, or they may not stick to the repayment schedule. It so happens that many times you and I take a loan and the bank thinks we are good enough to lend us a loan, but when they do lend us the loan, we may not be in a position to make the repayments on time, and this is called as subprime lending. These loans are characterized by higher interest rates, poor quality collateral and less favorable terms in order to compensate for higher credit risk. For example, student loans in India are considered to be subprime. So, lending decisions by financial institutions leads to housing bubble formation, borrowing decisions by individuals, and this leads to what is called as the financial crisis. So, basically the causes of the financial crisis include relaxation in lending regulations without actually checking the background of the person and not doing due diligence. The banks go in and give loans to people, poor credit worthiness of the borrowers, that is what I meant, rising EMI due to high interest cost, borrowers are unable to pay back the loan that they have taken from the bank, failure of banks and financial institutions to get back the loan from the people to whom they have lent, prime asset, prime mortgage backed by mortgage securities, and lenders are the biggest culprits. So, basically what happens because of the subprime crisis or the impact of the subprime crisis, major banks suffer from huge losses. Lehman Brothers, the investment bank in the US which collapsed, went out of business. Merrill Lynch had to sell itself to the Bank of America for a fraction of its former value. Countrywide financial corporations, the biggest US mortgage lender, eventually gets taken over by the Bank of America. AIG collapses in the year 2008. So, these were some of the major impacts of the global economic crisis that took place in the year 2007-8. Basically, it is a collapse of the economic system, the social systems, economic crisis. It leads to job losses, low consumer spending, recession, very low GDP growth in most of the countries, and poor prosperity for the countries. Now, was India insulated from the global financial crisis? What was the impact on India? Definitely not. In spite of the fact that India is not so integrated into the financial markets with other countries, India was also definitely impacted by the global financial crisis that took place in the year 2007-8. As a result of the crisis, India's growth decelerated to nearly 6.7% in 2008-9, and this represented a decline of nearly 2.1% from the average growth rate of 8.8% in the previous 5 years. So, despite having a banking system that was quite insulated from the global financial system, we still had to suffer the consequences of the crisis. So, what was the response of India? So, India resorted to what is called as the FRBM Act, that is the Fiscal Responsibility and the Budget Management Act of 2003, and it is an Indian legislation act enacted by the Parliament in India to institutionalize financial discipline, reduce India's fiscal deficit, improve macroeconomic management, and the overall management of the public funds towards a balanced budget. So, and it gives additional support to the exporters. So, basically India went in for a massive stimulus target, that was a RBI's target, to maintain a comfortable liquidity situation in the economy, to augment foreign exchange liquidity, to maintain a policy framework that would keep credit delivery on track so as to arrest the alteration in growth. So, some of the conventional measures that the RBI took was to reduce policy interest rates, reduce the quantum of bank reserves impounded by the central bank, and expand and liberalize the refinance facilities for export credit. So, the government also stepped in very proactively. It not only enacted the FRBM Act, it infused money into the system so that public expenditure, public spending could increase, particularly capital expenditure, government guaranteed funds and infrastructure funding. There was cut in indirect taxes, additional support was given to the exporters, expanded guarantee cover for credit to small and medium enterprises was also given, and these were some of the measures that the Indian government undertook to deal with the financial crisis. So, it was a crisis of a very large nature. Growth rates dipped across the world. Now, the global financial crisis of 2007-8 is currently being compared to the pandemic, the corona pandemic that has eclipsed the world economy, but many people say that the impact of the coronavirus has been far more damaging than the impact of the global financial crisis, and India has been one of the largest countries which has been affected by the pandemic more than it was during the global financial crisis. Thank you.